right, good evening, everyone. Thank you for joining our webinar for tonight. Today, I'm your MC tonight. I am Adam Wong from Philip Capital. Now, I would like to have a quick sound check. Can you guys hear me loud and clear? If you do, please type in the chat box or in the poll. All right, we're looking good. All right, thanks for the sound check. All right, so during the webinar, if you have any questions, do type them into the question box, and I'll address the question during the Q&A session at this end of this webinar. Before I introduce to our speaker for tonight, please allow me to introduce our company. As per usual, I need to emphasize on our disclaimer where this presentation has not been revised or reviewed by the Security Commission of Malaysia and also does not constitute any recommendation of anything. All right, so other than that, so let's talk about our company here, Philip Capital Sdn Bhd. So for Philip Capital Sdn Bhd, it's been established since the 7th of October 1995. It's a wholly owned subsidiary of Philip Capital Holdings Sdn Bhd, formerly known as Philip Futures Sdn Bhd, if you guys have been with us for a long time. All right, so we are also a trading participant of Bursa Malaysia Derivatives Berhad, and also the participating of organization of Bursa Malaysia Securities Berhad. And we are also a holder of a capital market service license. Of course, without licenses, we are unable to proceed with our businesses. All right, so across the nationwide of Malaysia, we've been established not only in the West Malaysia, we also established in East Malaysia as well, all the way from the Penang, all the way to Kota Kinabalu and Cebu and Kuching, and other branches that you may know of. So other than that, I would like to take this opportunity to extend our gratitude on behalf of Philip Capital to our clients. Without you guys, we are unable to achieve these milestones. So not only in Malaysia or Singapore, we also cover a whole wide of global network from the Hong Kong Exchange all the way to the New York Exchange. Now, of course, we are not only we are covering for the futures product, we also cover on the CFDs, securities, and other products such as the interest rate futures as well. You guys may have aware of. So why do we choose Philip Capital? Of course, we provide an advisory service, a wide array of products, and we also send out the latest market news to our clients, and our headquarters have the 24 hours broking and execution support. Now, whether you are our client or not, we also offer a free account opening, free one-on-one coaching session, free seminars and webinars. You can search for upcoming webinars on our website. Please do visit our website. Now, if you can scan through this barcode, you may proceed. I'll give 5 seconds. All right, so this is our market views and updates. You may scan the barcode or the QR. All right, so this is our trading platform, which is we call it Philip Nova. And this is our securities platform, which is the POM Globals. It not only covers it from Malaysia or the Singapore Exchange, we also cover the Hong Kong Exchange, the US Exchange, and as well as the Australian Exchange. And this is our CFD products, our platform that is quite user-friendly, and we also provide these live chartings. Now, for our ongoing promotions, this is our trade and earn with Philips, and this is mostly for the stocks securities clients. And if you would like to know more info, you can scan the QR code. Now, for this trade and earn with Philips, of course, this is until the 31st of December 2023, and only a certain threshold or a certain brokerage fee amount that you can earn up to these amazing prizes, such as the iPads, the AirPods, and the Apple Watch. You can earn up to the touch and go for 1,800 ringgit. And this is our CFDs, which is currently promoting as low as $2 for the brokerage fee. So you can scan for more info if you'd like to proceed. Now, on our guest speaker for today is Alvin Chow. He is the CEO of Dr. Wealth, which leads in financial media and education company focused on empowering the individual investors through the valuable insights, analysis, and educational resources on investment topics. Well, since 2007, he has been actively investing and publicly sharing his knowledge of financial markets. Over the course of 9 years, he has been trained more than 5,000 individuals. He has been sort of speaker in the major outlets, including the ChannelNewsAsia and MoneyFM. In addition, besides his Dr. Wealth, he also served as a trainer for the Singapore Exchange Academy and voluntarily conducts talks for the employees in corporations and schools. Now, please do enjoy this webinar session. Sit back and enjoy a beverage or snacks. On to you, Alvin.
Thank you, Adam. Okay, so let me just present the slides. I think probably you need to give the rights to me. All right, so I hope you can see my slides and you can hear me as well. So if you encounter any issues, please just type in the comment box so that we can help you with troubleshooting, right? So in case my mic go off or what, that's the only indication that I probably will get. So let me just give you an overview of what I'm going to go through today, right? So it is focused on 3 Thai stocks. So I'm not sure how familiar you are with Thai stocks, okay? And the thing that we want to discuss here is because the Singapore Exchange have recently onboarded 3 of these Thai stocks that are trading both in Thailand and now also in Singapore Exchange, okay, through a vehicle called Singapore Depository Receipts, or SDR. You might be familiar with ADRs, American Depository Receipts, where companies from China, most of them are like when they're trading in the US, they are via this ADR route. So it is a similar setup, and the benefit of it is that it allows you to invest overseas or to different countries stocks without leaving a familiar ecosystem that you have been using. So for example, if you have been like investing in Singapore stocks, now it becomes easier that if you want to get exposure to other ASEAN countries like Thailand, it has become a lot more easier because access is right at the same exchange. And hence, you don't need like the dedicated account just to trade Thai stocks. You might not buy a lot, right? You may just pick a few that you think that may have potential, and also more of diversifying your investment beyond just one ASEAN country, right? So ASEAN have 10 countries, okay? So that means that there are more room for diversification to improve that exposure to a broader range of businesses, okay? So that is my purpose today. I'm going to share with you 3 of these Thai blue chips so that you have a better understanding about some of the opportunities there, right? And you can conveniently invest it through Singapore Exchange today. So there will be 3 stocks, and I group them into different themes, right? The very first one is retailer, right? The largest retailer in Thailand, and it is also owned by the richest family in Thailand. Okay, so I will give you a bit more details on that. Second is about oil and gas company, right, which is more of an upstream oil and gas company, which benefits a lot from high oil prices, which we have seen in the last 1+ years. With the inflation going on, oil prices have been high, and oil and gas company has been doing very well. And this is one of the ones that I think, because their cost of production is very low, right? So hence their profit margin are really commendable. And the third one is an airport stock. Okay, so very few airport stocks are actually listed for investors to buy, right? There are other airport stocks, but Thailand, we know that it is a major tourism country, and hence the airport business is also a very lucrative one, right, which we will discuss further as well. Okay, so these are the three businesses that we'll look at. So these are the richest people in Thailand, okay, and of course, the richest guy or the richest family, I don't even know how to pronounce their name. It's a bit difficult for me, so I'll just skip that. So this richest family owns the CP Group. Okay, the CP Group. You might see some of their products in the supermarket, right? Those kind of fried chickens or what. They do a lot of frozen products, or the CP shrimp wonton. Okay, so they do have a lot of all these products that's distributed around the region or probably even around the world. And this is their empire, right? The CP Group is a lot bigger than just food and beverages. Okay, so today the slice that we are looking at is this slice, right? It's the retailer. It's the shopping. It's not shopping. It's the supermarkets, the convenience stores, as well as the discount stores. Okay, so they own major market share. In fact, #1 market share in all these areas, which I will show you the numbers later. They also have a lot of agricultural stuff, right? They also have a telecommunication brand called True. You might have used their services when you went to Thailand. And they also have some e-commerce digital business platforms, property development, CP Land. They also have automotive industrial. They also have pharmaceuticals, right? They also have investment, right, in Ping An. I think they are the largest shareholder of Ping An Insurance. And they also have stake in Itochu, right, which is one of the Warren Buffett investments in the trading firms in Japan. So you can see that they are very well diversified. It's really a very big conglomerate that we're looking at. Okay, but the investment is just one slice of it, right, which is this CPO. Okay, so that is the company that we are looking at for this first stock. So CPO have this retail stores. Okay, there are three types. One is the convenience stores, which are like a 7-Elevens. Second is the wholesaler, like a Macro, which is like a Costco. Okay, so you know that in US, there's this a very famous Costco discount store where you buy in bulk and then they charge you very cheap prices. So they work like this. And then the third is supermarket, Lotus. And I believe that in Malaysia, you see quite a number of Lotus. Okay, so the Lotus in Malaysia belongs to DCPO as well, right? Not just in Thailand, but they have a good presence in Malaysia. So essentially, when you buy this company, you are buying these retailers, right? Whether is it 7-Eleven, whether is it Macro, whether is it Lotus. Okay, so I give you a bit more detail first. Let's talk about the wholesale and retail markets. All right. Let me just take a look. Okay, right. Let's talk about this first. So Macro and Lotus, they are a bit different, right? As I said, the Macro is more like large number of products you buy in bulk and lower cost. Lotus is more like a day-to-day typical supermarket that you have experienced. So Malaysia is in fact the second largest, if I'm not wrong. Okay, I think they never place it here, right? But they have a total international stores, right, of 65. Okay, I do think that majority of them are in Malaysia, just that they didn't list down here. Okay, then for Thailand, of course, most of their stores are going to be in Thailand, whether is it Macro or Lotus brand. All right, so these are the businesses for that side, and this is for the convenience store, which is a 7-Eleven. So 7-Eleven, it is a Japanese brand. Okay, there is a 7 and I listed in Japan. Okay, so 7-Eleven didn't come from Thailand, but they did get exclusive rights, okay, in Thailand, Cambodia, and Laos. Okay, right? I think the 7-Eleven rights in Malaysia should be under Berjaya, right? If I'm not wrong. Okay, so they each have their own territory. Okay, so they get the exclusive license in 3 out of the 10 ASEAN countries for these 7-Eleven rights. And in Thailand, this is specifically in Thailand. Okay, the 7-Eleven have a 74% market share. right? That was last calculated in 2 years ago, 2021. So it is a dominating market share, as well as Lotus Gold is also under them, right? So 9% plus 74% is 83% market share for convenience stores, right? So it is dominating in a sense, and as well as this Macro and Lotus will add together is more than 50% market share of this larger format retail stores, okay, in Thailand as well. So we can see that they have this dominating space, and we are talking about day-to-day groceries, necessities, essentials. These are very resilient businesses, right? Whether good times or bad times, they have to serve the public, and their products are always in demand. Okay, and for 7-Eleven, they do have growth that's coming, right? Their presence in Cambodia and Laos is not as big as what they are in Thailand. So in Cambodia, it's about 42 stores, right, as of end of 2022, and they're growing that number. And in Laos, the first store just opened this year. Okay, so they're expanding to the neighboring countries already. And so you can see that from 2022 to 2023 first half, Cambodia added another 50% more stores. That's how fast they are growing. And in Thailand, they added another 700. Okay, so despite being the largest, there's still a lot of room to grow. All right, and in fact, they are the largest 7-Eleven stores. Thailand is the largest country with the most number of 7-Eleven stores outside of Japan. Okay, even more than the US, even more than China, those bigger countries, and yet 7-Eleven, the number of 7-Eleven in Thailand has outnumbered in those bigger countries as well, right? Except Japan. So they are number 2 in the world in terms of number of stores. So this is their revenue for the past 5 years. Okay, and this is what I mean. In 2020, we all know there's COVID. Okay, and these businesses, their revenue will not get impacted because we're talking about daily necessity and essential. So you do see a dip because likely some people buy less things, okay, but it is not a very big dip that we're talking about. So they did able to maintain throughout the pandemic, and then 2022 when tourism started to expand, all the measures started to loosen up. You can see that the jump in revenue has increased a lot. Excuse me. Okay, so that is the trajectory of their revenue, and this is their dividends. So they do give consistent dividends. Even in 2020 COVID period, they did drop their dividend. Previously, they have been a very steadily growing dividend stock. Then 2020 they cut, 2021 they cut a bit more, and then 2022 they started to recover. All right, so it's likely that they are getting back on track with their dividend growth again. This is for the first half of 2023 results, and you can see the revenue continue to grow, right, compared to a year ago. Okay, and net profit continue to jump a lot more, right? The margin started to improve, and it is likely that they will recover back to pre-COVID levels, okay, or at least to the COVID levels. We only have 2020 over here, because the latest 2 quarters revenue we look at, no, sorry, net profit, right? We are talking about 8 billion baht. Okay, so second half likely to be another 8 billion or 9 billion. So they are likely going to surpass these 2020 numbers. So they are getting back to the pre-COVID levels in terms of their profitability. Okay, the revenue has already recovered, right? As you can see, right, revenue has already recovered. 2022, they have jumped up by 300 billion baht, and then for profits, they are also likely to surpass this year, right? And the revenue still grows some more, grow another 10% for the first half. So it's looking good, and they are already back to pre-COVID levels in terms of their business fundamentals. But however, if you look at their share price is not at the pre-COVID levels yet, right? So pre-COVID level high was here, okay, and now the share price is here, right? Business have went back to pre-COVID levels, but share price haven't yet. So it suggests to me that there is some undervaluation over here, okay, because the business have moved ahead while the share price is lagging behind, right? So these are stocks that you can conveniently invest in via the Singapore Exchange, right? If you have a Philip account, you have the Singapore market access, you can just buy this Thai stock directly via SGX. It's traded in Sing dollar as well, right? It's not traded in baht. Okay. The second company is this PTT Exploration and Production. And I wanted to show you a bit more detail over here, right? So the company in focus is this company, PTTEP. EP stands for Exploration and Production. It's part of the bigger entity called PTT Public Company. Okay, and then in turn, this PTT public company is owned by the Ministry of Finance. Right, so the first company is owned by the richest family in Thailand. The second is a state-owned company. The Thai Ministry of Finance owns 51% of the mother company, and then the mother company owns 64% of this PTTEP. Okay, so it's 64%, and MOF in Thailand owns this PTT PLC at 51%. Okay, so that's the relationship that I want to draw for you. So it's indirectly a state-owned company, and it has benefits, of course, right? Just like Petronas in Malaysia, it has that kind of advantages, okay, to access certain oil fields and things like that. So same thing for this PTTEP. It does have a lot of the oil fields, right, in around Thailand, right? 63% of the revenue is generated from Thailand oil fields. Okay, but they don't just have Thailand. They also have Middle East, right? In Oman and UAE, another 15% comes from there. Other parts of Southeast Asia, 21%, including some parts of Malaysia. They also have some of the oil fields there. Okay, Africa is still less than 1%. Rest of the world, minimal. Okay. But interestingly, what I saw was that in Africa, they actually have a sizable asset. Okay, the oil field actually is worth a lot, but somehow it's not contributing to revenue as of now. Okay, so I did ask the management whether they have intention, or this is a sign where they can unlock a lot of revenue from these oil fields in Africa. But it seems like their focus is not there to develop Africa assets yet. Okay, it seems like they're focusing more on the Middle East as well as Southeast Asia. Right, so those are the areas that they are looking at. Probably because of there's still a lot of oil to be produced, and the cost of production has stabilized and a lot cheaper. And probably that's why it's a low-hanging fruit as compared to develop those kind of more greenfield areas in Africa. And this is another good sign that I see from the company is that we know that these fossil fuel reserves are dwindling. Okay? It is not renewable. We do not need to wait for how many million years in order for all these oil fields to be produced by Mother Earth. And every day we're going to burn more, right? Every day we burn, and the reserve will dwindle over time. But what this PTTEP did was that they managed to increase the reserves. Okay, they managed to buy more, acquire more oil fields, and hence their reserve went up. And now the reserve life have gone up to 10.7 years as compared to previously, probably based on this, about 7 years, right? 3 years ago, okay, they were about 7 years. Now it's expand. So it's a good sign that they are acquiring all these dwindling reserves, okay, and increasing their own reserve on the way up. And this is probably the most spectacular number that I find for PTTEP, because the cost of production of 1 barrel, which is a mix of crude oil as well as natural gas. Okay, it's a mix. It's not just crude oil. It's a mix of these two, and it costs them just $26.63 per barrel in the latest quarter to dig out from the ground. And with all the costs that's involved, right? Exploration costs, operation costs, admin costs, financing costs, royalties that you pay to the government, depreciation, everything. Okay, all in, it only cost them $26.63. Okay. Meanwhile, in last quarter, they were selling at $48.62 per barrel. Okay, so you can see that the profit margin is almost double. Okay, almost double in this case, and it is. Yeah, maybe the oil price will probably stabilize going forward. Okay, the conflict that's happening in Russia, Ukraine, Israel, Hamas seems to be stabilizing, right? So that will give some oil price stability at this point in time. Okay, and as long as the oil price stay, you can see that profit margin will continue to be good, right? And if oil price go up, of course, your profit margin will increase a lot because the cost of production is unlikely to increase, right? But the sale price will increase with the oil price, okay, as well as natural gas as well, right? So these are the financial figures, and I just want to highlight a few, okay? Profit margin, anything that's in this kind of range, 20+%, I think they are very healthy, okay? And I do think that quite a number of oil and gas companies could achieve this due to high oil prices in the past 1+ years, okay? But that said, the debt level is pretty low. It's just a 26% debt to equity, right? Whereas for majority of oil and gas company, their debt level tends to be higher because in this exploration business, the capital expenditure is usually very high, right? It costs a lot to build an oil rig, to explore a field, to drill, and then to bring it out from the ground, and then to transport it. So usually the cost of funding such exploration will require a lot of loans, but somehow their debt level is very low. It's just 26% equity, okay? Even lower than property development companies, right? So it seems like they have, that's why their ROE is in the teens, right? It's in the double digit, okay? So they do have this kind of healthy margins and very low debt to talk about. And it's especially advantageous given that interest rate now is on the higher side, where they have a lower debt. That also means that their financing cost is lower, and hence their profit margin can also be higher because less of this operating cash flow needs to go to pay or to repay the loans, okay, on all the interest. So lastly, it's also a dividend stock. Every year has been giving dividends, and likewise in 2020, and I think that oil and gas company in year 2020 has been hit very badly. Yeah, I don't know how many of you recall if oil price actually went below $0 during COVID. I think sometime in June, right, where the issue was there wasn't enough storage. There was too much oil being produced. They are not stopping the production, and yet we're running out of places to store because people stopped traveling, right? People stopped driving around. The factories were shut down, so the entire consumption of oil just went down. Okay, hence there was not enough storage, and people are paying you to take the oil to store on behalf of them. So that was what happened, and it has never happened before. I've also never seen before, right? Futures contract can go below $0. It's unthinkable. Okay, so does it mean that if I buy at minus $10, I'll make? You have to pay me, not I pay you for getting the assets. So it's a little bit warped in that sense. And all these oil companies, of course, were punished very badly. Oil prices went down a lot. And it's only during last year onwards, the oil prices recovered a lot and the oil and gas company started making a lot of money. But 2020 was really very dark years for them. Okay, even 2021 wasn't a very good period for them. But they managed to survive. And what is more impressive is that PTTEP continued to give the dividends. Okay, and I think this is also likely due to their higher margins as well as their lower debt. Okay, hence they had enough cash to still distribute dividends in the worst of times. But this should be seen as something impressive, right? They still managed to give, although it's lower dividend, but considerably high in that year, right? Since the oil price went below zero, okay? And then it recovered, dividends also increased. And last year was a very good year for oil and gas company. It also gave very good dividend as well. And this year so far, they match what has been given last year. So probably likely they are going to match the same, right, in terms of dividends for the second half. And that would mean about 5.6% dividend yield. Okay, pretty good from my perspective, right, even for oil and gas company. And which means that this can be a proxy to oil price because unless you're trading oil futures, right, crude oil futures, otherwise it's quite hard for retail investors who only buy and sell stocks, okay? And to get exposure to oil price, one of the ways is of course by oil and gas company. And you can see that the share price of this PTTEP, let me see which one is crude oil. This is crude oil price, right, the orange line, and this candle is PTTEP. Okay, so one way is to buy oil and gas companies such as PTTEP, where they move closely with the oil price. So when you buy PTTEP, you're actually buying indirectly betting on the direction of crude oil. So they move very closely in tandem together. So that's the advantage of it. And on top of it, it doesn't have maturity date. You can hold longer period and it still give you dividend. Okay, crude oil when you buy it doesn't give you dividends, but this PTEP at least still will give you dividends on top of the price movements. So it can be an advantageous way to express your oil trades via oil and gas company like PTTEP. Okay. Now let's move on to the last stock of the day, and this is related to the airport stock that I'm talking about. And we know that Thailand is one of the major tourist attraction, and it also contribute a significant amount of GDP to Thailand. Hence, it's very important. And the international travel, right, has not really fully recovered. Okay, there's still room to go to hit the pre-COVID levels, right? And for one is that we know prior to COVID, China has been one of the major tourist source of tourists. Okay, they are all around the world. They travel and then they spend, and yet despite the opening that was done last year, the Chinese tourists are not really traveling out of China. They are just traveling within China. Domestic travel has surpassed pre-COVID levels. Okay, so somehow the Chinese tourists are not coming out, and the Chinese tourists is also one of the major source of tourism for Thailand. And so this year, 2 months ago, right after the new PM was being appointed, he led the cabinet, right, to implement the 5-month visa-free kind of travel for Chinese tourists, okay, until next year. So in a bid to attract more tourists to come, especially from China, which is a major source of tourism. And then they went on to expand more visa waivers, right, to India, to Taiwan, and also extend the dates further, right, to May 2024. Okay, so these are going on, and they are trying to boost tourism, obviously, right, through these policies and measures. And this Airports of Thailand, okay, is the company that we're looking at. And based on this company's market cap website, when I sort through all the airport stocks that are listed around the world, okay, then I realized that they are the biggest airport stock, okay, in terms of market cap. And in terms of market cap, they are the biggest, right? Which again, not surprising, right? Considering that Thailand is reliant on tourism, and it's a very attractive place for tourists to visit as well. Okay, and especially with close proximity to Malaysia, your good neighbor, and you can just travel easily to Thailand. I think it's also one of the favorite destinations of Malaysians as well. So you should be very familiar with the Thailand airports if you fly over there. And this Airports of Thailand own 39 airports in Thailand, okay, which are majority already. And the most important airports is the Suvarnabhumi and Dom Yong. Both are in Bangkok. Okay, so these two Bangkok airports contribute to 75% of the passenger capacity. Okay, so these are international travels, right? The rest are, okay, Phuket still can have international Chiang Mai, yes, but a lot of others, you can see this. Oh no, these are the DOA airports. Okay, so AOT airports are this one are usually the international airports. Okay, so those are the major airports that are operated by these AOTs. And interestingly, I find that airport business essentially is a real estate business, right? Okay, because you take the land and then you build a building, you build the structures, you build the facilities, and you rent out space. Okay, what space are we talking about? When a plane land and you park in the airport, you charge them money, right? Just like a car park in the car park, you charge them car park fees, right? It's a real estate business. Second, when the passengers leave Thailand, they will have to pay a fee to the company as well, right? So this is dictated by law, okay, by Thailand policies, and they need to pay these passenger service charges, right? Which I believe that part of the tax receipts will go to the government as well. When the aircraft is being maintained at the airport, they will also levy a charge. They will rent out office space. Okay, they also collect money from there, which is also a real estate business. And service revenue, this is like those, when you check in counters, right? So those are also, they provide manpower, provide a service, they also make revenue from there. And lastly, all those duty-free shops, and they also have to pay part of the revenue that they make or the profits that they make and share with AOT. Okay, so essentially, every inch of the airport can make money. Okay, that is the beauty of that supercharged real estate business. It's a very specialized real estate business. And we can see that majority of the revenue comes from the departure, okay, about 40%, right? That's the main revenue. This is the duty-free one. And essentially, all of them are related to passenger traffic. Because if there are more planes flying, right, more passenger means more planes flying, your landing and parking charges will go up, your departure passenger services will go up, your aircraft will need more maintenance, right? Office state rental, maybe this will not change, right? So whether there are more passenger or less passenger, the rent will still go. Service revenue, yes, you need more counter staff services to check in people, and concession revenue will go up as well because more duty-free sales. Okay, so you can see that a lot of the revenue is highly dependent on the passenger traffic. So the moment they can increase passenger traffic, the revenue will increase. Right, 5 out of these 6 revenue segments will go up in tandem. Okay, some more than the others, of course. And this is another thing that I think we should look at, is that the passenger departure used to be more than 40% of the revenue contributing to AOT. But if we look at the first 9 months of this year, it is still below 40. Okay, still have some room for improvement. That also shows you that the passenger traffic has not fully recovered in Thailand. And this is another way to look at it. Okay, let me just show you the years. So these are the last 5 years of passenger traffic in Thailand. Okay, important one is the light purple one, which is the pre-COVID numbers, which is this one, this purple one. Okay, this is the important one. Okay, and then the latest one, which is FY 2023. For the first, in this case, was about 7 months. Okay, so you can see there's still a distance. There's still a distance, although it's narrowing, right? But there's still a distance to recover to pre-COVID numbers. Hence, I would say that there's still some upside for the business, right? Even without talking about expansion. Okay, they're actually talking about expansion now. They're planning forward, so they're actually expecting that there will be more passengers than pre-COVID eventually. Okay, of course, the question mark is when. All right. And this is why I want to show you the financial figures. Right? It's very lucrative as well. Okay? It's important to look at pre-COVID numbers, okay? Because this is where they are operating at normal capacity. 2020, 2021, 2022, all these are bad years. Right? These are all COVID affected years. So it's not a true representative of their earning capability and powers. This latest year is just recovering, right? Which you can make a comparison. Okay, so let's focus on the 2191 first. If you look at it, the ROA is at 13%. Okay, I've never seen a real estate company, right, can generate a double-digit return on asset ratio. It usually is a single digit, and it's low single digit, 3%, 4%, 5%, right? Depends on the gearing. If they borrow a lot, then of course they can push up the ROA. Right? So that is not indicative, right? Their loans, again, not very high, right? Just 28% of the equity. So the impressive part is the ROA. And hence, when the years 2021, 2022, not enough passenger, you can see they sink into a loss, right? The EPS is negative. But this year they recovered, right? Turn positive again, turn profitable again. But the ROA is still low because the earnings have not fully recovered, just as its revenue. It has not fully recovered. Okay, they need more passengers coming back. When we compare to the share price, right? So this is how it looks like. Okay, it's a little bit opposite to what we saw in CPO. Excuse me. So for CPO, the business have recovered to pre-COVID numbers, but the share price have not. But AOT is a little bit opposite. Okay, the business have not recovered to pre-COVID numbers, but the share price have gone up. Okay, closer to the pre-COVID figures lah. Okay, this is at around 80. Okay, 80 baht, and then the share price is about 70 plus. Okay, by right, when I do a interpolation, when I see that it is about 20% off lah, the passenger. Okay, 20% off. It means that the share price should be 20% lower than the peak lah. So that's how I roughly gauge. Actually, it's 20 or 25%. Let me see. 25%. Sorry, 25%. Okay, so it's like 25% away. So if 25% away, the share price should come down from the pre-COVID numbers from 80, 25% down, maybe around a bit lower, about 60 baht. Okay, that is probably a fairer price to pay if we take a relative assessment on that. So that is how one can look at it, okay? Especially with COVID that just happened. I think not just happened 3 years ago, but the effects is still lingering. Okay? And I always like to make it as a beneficial angle for investors, right? First is that how did the business perform during COVID? Okay? You want to see the resiliency, okay? Because it's really a test of whether business can survive or prosper. So it is a very good yardstick for us to look back in those years. And second is that whether they have recovered back to the pre-COVID numbers. Okay, so that is also another yardstick that we can use. So that's how I think the assessment can be made. Okay, and a lot of people may worry about, wow, if I buy Thai stocks and I don't understand Thai, if they go and publish annual report in Thai, I'll be having an issue, right? Don't worry, okay? A lot of the images or a lot of those charts that I share with you today, right, is actually taken from their investor relations. So I was actually quite surprised that the standard of English is really quite good, okay? Even when the IR representatives or the management they speak good English. The reports are in English, the slides are in English, and their investor relation website also in English. Okay, so a lot of the disclosures are all in English, which is not an issue for most people. Okay, so just to end it off is that you can invest in this these three, okay, these three, and there are plans for more. Right? As of now, these are the 3 blue chip Thai stocks. If you go to Thailand, you ask them about these 3 stocks, they will sure know about them. And they are traded on SGX via the SDR mechanism, Singapore Depository Receipts. So even with your current Philip account, you can access Singapore stocks, means you can buy these 3 counters via the same account that you already have. You don't need to open new account. You don't need to go and set up Thai accounts just to trade Thai stocks. Now it is in expanding, right? There are going to be more of these overseas stocks that are already available in the familiar exchanges that you're already trading in. Okay, so that's the good thing about it. So that's the end of my sharing, and I'm open for your questions. You can ask, and I think Adam will help with managing the session.
All right, thank you, Mr. Alvin. So, okay, so we got a few questions here, Mr. Alvin.
Yep.
All right, I might read out in the first question first. All right, so this is a very interesting one. In the recent resurfaced land bridge project news, like where the Thailand's trying to attracting the US investors, how does it affect the Malaysia and Singapore sectors?
Yeah, talking about the building at canal, right?
Yeah, that's correct.
Okay. I guess you guys will know better than me in this aspect, right? Because it's very close to your heart. I think it is still too early to tell what the impact is going to be, right? Of course, it can really cut short the shipping routes, okay? But then again, you see, right, when the ship travels, they send goods to another area. Usually, they probably won't just send everything to one place. They will probably make several bounds, right? They'll drop something from one port, then they'll pick up some things and go to another place. So it is natural that they need to go to many ports along their routes. And by cutting it doesn't mean that you're just having a ship from say US ship all the way to say Europe, okay, so Europe ship all the way to China, and then you bypass all the port, you just go directly via Suez Canal, and then you go cut through Thailand, and then you go to China, or the other way around. Okay, because the way I see it is that likely, even a ship leaves Europe, they probably will stop in maybe somewhere in Middle East, a point Middle East, load something, then after that go to maybe India, right? Unload something, then move on to Malacca, unload something, then go to Singapore, unload something, then go to Vietnam, do the same thing, and then go to Hong Kong, go to China, right? So I think that typically my understanding is that the ship will try to maximize this kind of routes, try to make multiple this kind of transportation to many different destinations. So if let's say the ship needs to go to Singapore or go to Malacca, right? It will have to go down. Whether there is a shortcut you can go through, it is besides the point. Okay, so that is my view. I don't think that it will totally take away or change the shipping route that we have today, right? Especially we consider that quite major ports are down below Thailand, and hence many ships will still have to pass by over here, right? Like if Malaysian or Singaporean buy stuff overseas, and you need to ship, right? They need to come down, right? They cannot be stopping at Thailand and then I don't know, take the train down or take the trucks down, right? I don't know how efficient is that going to be, lah. Okay, even if that they need to use truck, right? It will still need to go through Malaysia. So I don't think it's going to be a big impact, but as I said, it's too early to tell. It remains to be seen. And now it's just at the funding stage, right? They've been talking about this for quite many years, right? And that's at the funding stage. So I think it's a bit early to worry about this.
Yeah. All right. So yeah. So moving on to the second questions. Okay. So with the rising of EVs and ongoing towards to a more sustainable energy, what do you think of the PTTEP future growth in the future? What do you think? What is your point of view, Mr. Alvin?
Okay. I think it's not just the EVs, right? We are talking about solar is coming out, wind, all these renewable energies are coming out. And of course, people will start to say that, oh, that is probably the start of the end for oil and gas. Unfortunately, even today, renewables are not enough to replace fossil fuels, right? And totally not even possible within the next 5 years, okay, to replace fossil fuels. So we will still be very reliant on fossil fuels. And if you take a look at, let's take Warren Buffett as a reference, right? So Warren Buffett still invests in a lot of all these oil and gas companies like Chevrons. Last year or 2 years ago, he bought Occidental Petroleum, right? So he's still a very big investor in oil and gas. When everybody is moving to renewables, he's still investing in oil and gas. So is he like silly or what, right? Of course not, right? He's probably one of the best investors out there. And hence, he always also take a long-term view. Okay, so if we base on that, right, means that he doesn't believe that we can live off oil and gas in the next 10 years, okay, at least, right? Because his horizon is probably even longer than 10 years. And we'll probably run out all the fossil fuels before we really switch to renewables. Okay, so I do think that renewables, yes, they'll eventually take a bigger share of energy production, but we cannot win off oil and gas that soon. So I do think that they still have a place in portfolio, right? Like last year, if you have oil and gas stock, you will have done very well, right? Oil and gas, I think the energy sector in the US was up 40%, right? While tech companies were just down. Okay, and this year energy is still holding up well, right? Although tech also did very well, right? But I still think that energy has a place in the portfolio.
Awesome. So okay, so we'll move on to the third question. So one of our attendees are asking, how are the Thai dividends treated in Singapore?
So it's via the SDR mechanism, right? So how it works is that the stock is traded in Sing dollar. The dividends will also be received in Sing dollars. Okay, so the SDR handler will do the conversion, okay, and you'll get it in Sing dollar. And for Thai, there's a dividend taxation of 10%. Okay, it's not, of course, we don't want dividend taxation, right? But I don't think 10% is a big deal. Okay, as compared to US, is 30%. I think that's too hefty. 10% I think is still reasonable, right? Not more than that. Okay, so they will deduct the dividend taxation, and then they also deduct, I think, a 1% dividend handling fee, and then you'll get the rest in Sing dollars. Okay, so that is how it works out.
All right. So let's move on the next question. One of our attendees as well. What do you of Thai stocks movement comparatively to other countries' stock like US, UK stocks, and etc.?
I think it depends on, at the end of the day, few things. First is your allocation, right? So, are you comfortable investing everything in one country, or are you comfortable to diversify in different countries? And you want to diversify to different countries, how many countries is enough? Okay, so I think that would solve that question on the first point, right? Because if you invest, if you are comfortable investing everything in one country, right, then of course, US is always a very attractive place for a lot of investors because it's the biggest market in the world, very liquid, and a lot of familiar names. They are all MNCs, big brands. So people who are comfortable there, I think it's fine, right? But some people will find that I don't feel comfortable just investing everything in one country, right? If something goes wrong, there goes my portfolio. US dollar is also another consideration, right? Last year, US dollar is has strengthened, okay, which is beneficial. But then in most years when the Federal Reserve is more lax with their interest rates, right, more loosening, then the US dollar will fall. Okay, so it has a lot of all these implications, right, especially when it comes to overseas investing. Okay, same thing if you choose and say, since it's so complicated, I just stay in Malaysia, I just invest in Malaysian stocks, easier, right? So I trade everything in ringgit, more familiar for me, right? It's also fine, right? As long as you are comfortable with it. Of course, you also must know what's the risk, okay? So that is, I think, at least the first point, right? If you want to diversify, how many countries you want? If not, are you okay with just staying in one country? And generally, you'll have country-specific risk. So down here in Singapore, it's more like usually investors will invest in a myriad of places, right? They'll invest in Hong Kong, they invest in US, they invest in Singapore. And the second point is that there's also different investment styles, right? So if you are more growth investor, of course, you will look at more US stocks or even China stocks. If you are more dividend investor, right, you might just stay in Southeast Asia, right? Whether is it Singapore, whether is it Malaysia, there are quite a number of dividend stocks because they are merchant companies. They don't grow a lot, but they are profitable and they do give dividends, right? So it also depends on investment strategy. Okay, there is no one correct answer for everyone, and it really depends on what you want and how comfortable you are with the risk that you're gonna take.
All right, thanks, Alvin. So, okay, so that answers most of the question. It's very interesting that you can answer for those beginners that who are looking into investing in stocks. So, all right. So, anything from your side, Mr. Alvin?
No,
Yes.
I don't have anything. Yeah, I'm
All right.
just happy to answer questions. If there's no question, then we can end early.
All right. So, I think that's it for the question. Nothing else going on. So, so this will conclude to our session for today. So if you have any questions or any other inquiries, you can contact us and you can approach to our nearest branch. And this is our Facebook page, and you can also access this webinar later in our YouTube channel. You just go through and just type Philip Capital Sunyan Bahat. It will always appear on our top. All right, so this is our contact numbers for the branches for whatever that is nearest to your doorstep lah. So all right, so you can snap this for pictures. So
Yeah, just give you a fun tip. Okay, the SDR issuer is also Philip.
All right.
Yeah.
Thanks.
So
Right. I will take note of that. All right. All right. Thank you, Ms. Alvin, for our guest speaker for today. It's very interesting for the Thai stocks. Me personally, myself, I never looked into the Thai stock, but you just gave me a very eye-opening that there's always an opportunity in every market, as Alvin mentioned.
I think I agree with you that every country will have their good stocks, and it's always interesting, and keep our mind open to a lot of all these opportunities that we may just have missed out. Thank you for having me, and hope to see you guys again. Goodbye.
Goodbye, Ms. Alvin, and have a good night, everyone. Thank you. Bye.